The market crashed on Saturday. Should you just sell everything and get out? Look how much it dropped. That's what we're going to talk about. Now, here's what's interesting. I zoomed in on this, and you'll see this on places like Twitter, where they'll take a chart. This is the total market. And they'll say, ooh, you should sell everything. Why? Because people like this, James Wynn, who has 400,000 followers, will say, sell the dip. Then he'll say, this morning, this is Monday, after the weekend, and he talks about things like there should be, where do you say, more red candles. Red candles are going to be violent today. But notice he posted the other day, my short is up. He shorted the market. You got to be careful what you see and what you read, because some people have ulterior motives. They want you to sell out because it helps them with their shorts. So I'm going to point out two things in one particular indicator that I did in my school community this weekend, Saturday night, after the U.S. had bombed Iran, because the market did start to drop, to say, okay, what's really going on here and what should we look at? When do we know that we should just get out of the market? And when do we know that things aren't really that bad? So I'm going to show you two things to look at. First, I'm Brian, big dumb animal. Don't do what I do, informational purposes only. I have a school community down below that I just referenced a moment ago. I've got courses on all things, adding more courses. I'm putting one up on what's called OBV, on balance volume, that I'm going to show you in a moment. And we also have discussions around crypto and what's going on every day. And we did, of course, Saturday when this happened. So let me show you something first here. And that is, if you look at an individual crypto, like Toncoin, you may know this, you may not, but I'm just going to go over it. 7 billion market cap. Scroll down, and it's going to show you the exchanges that it's on. The largest one is typically Binance, if it's on Binance. To move the price up 2% or down 2%, up is $800,000, down is $1.5 million. Okay, let's just say that the average is around $1 million to move the price up or down 2%. $1 million, you're thinking, all right, what does that mean? Well, it's a $7 billion market cap. It's actually a $14 billion fully diluted. But let's just look at 7 billion. 7 billion is what? It's 7,000 millions. So if it's $1 million to move the price up or down, then that's only 1/7,000th. In other words, let's just say that means 1 out of 7,000 people are actually selling. Yet you see the price go down, right? And people say, oh my goodness, look, everything's going down. The price on this one particular one's going down. You need to sell because everyone's selling. Well, in this case, if it's a 2% move, actually only 1 out of 7,000 are selling. So just know that it doesn't take much to move the price one way or another. Crypto is very volatile. That's the first thing. I'm going to show you 3 things. Second thing, know this. Crypto is volatile. There's many reasons why. Here's one reason why. Because you can have a knee-jerk reaction in crypto, and you can't always have a knee-jerk reaction in stocks. What do I mean? Saturday night, the U.S. drops bombs on Iran. People with crypto can go to the crypto market because it's open 24/7 and start selling and panicking. People with stocks can't because the market's not open till Monday, at least the U.S. market. So what do they have to do? They have to watch the news Saturday. They have to check it out Sunday. They have to cool off. Cooler heads prevail. Well, what did they do? What did the New York Stock Exchange do? Look, it's Monday. The New York Stock Exchange went up. Meanwhile, crypto is up today as well, but look at the knee-jerk reaction when these bad things happen for Saturday and Sunday when people just reacted. So that's one reason it can be so volatile, because 1, it doesn't take much to move the market or a particular crypto. 2, we've got a knee-jerk reaction because you can buy and sell instantly upon news. And 3, let's look at, I've already highlighted it here, an indicator. If you go to indicators, you type in on balance volume, it's going to pop up. If you can spell, here it is. By the way, you click one of these little stars and it will put it on your favorites list. So you don't have to forget it. You can just click in and grab it. Here it is. I did a whole course, which I'm releasing today in my school community on balance volume. I think most people would agree you don't use any one indicator. You look at multiple indicators, but I'm just going to show you this one. What is it trying to show us? It's talking about volume. What does volume do? Volume precedes price. When it comes to stock charts, they look really complicated, but all they have is pricing data and volume data. That's it. And then the indicators are mathematical formulas to try to tell us something. Past experience does not necessarily mean we're going to have those same results in the future. You've heard that a million times. What is on-balance volume trying to tell us? Supply and demand. A lot of people want something, price goes up. A lot of people stop buying something, price goes down. That's pretty obvious. So on-balance volume, in a nutshell, if we have an up day, we add the volume. If we have a down day, we take away the volume. So we see here, if we look back, this is about 1 year of the total market. It's got a high up here. Next time it peaked was here. Next time here and here. See, the red line just shows you that those peaks are coming down. So if you look at just the pricing data and you look at this chart, you might say, well, that's not good. It looks like it's eventually just going to break to the downside. However, look at OBV. During this time when it shot up, you've got ups and downs, ups and downs, ups and downs. But the OBV is way up here. Why? Because during the ups, you had a lot more people. That long line represents a lot of people. This tiny down line, because it's a small down line, represents less people. That means that more are buying during this time period. That makes sense because the price went up. Here's what doesn't make sense. The price went down, but the volume went up, the on-balance volume. The price went down again over here. Now the OBV did come down, but not that much. This is almost the same as this, but this one shot up. So if we've got these prices coming down, shouldn't we see that on the on-balance volume? Yes, if there's more sellers than buyers. So what are we trying to figure out? We're trying to figure out which way the market's going to go. By the way, you can use this indicator on any particular crypto. If we're trying to figure out if the market's going to break to the upside or the downside, and we're looking at this and we see people selling off as the price is coming down, that tells me more than likely with this one particular indicator that the market's going to go down, break to the downside. But we're seeing it go up. Even though the price, or the total, in this case, the total market, if it was an individual crypto, it would be the price of the crypto. But even though the total market cap is coming down, we're still seeing over time more buyers than sellers. Buying pressure. Take a pot, fill it with water, put it on your stove, put a top on it, watch that sucker boil. Eventually, probably the top will blow off because you've got pressure building. Takes time, but that pressure will build. This takes time, but that pressure is building. In my opinion, it's going to break to the upside. So this is telling me, do I get out of the market and capitulate, as they say, which means just give in to all the people that say, sell, sell, get out, get out? Or do I sit and wait? Well, the people in the Dow Jones are saying, everything's cool. Just hang tight. All right, now let's talk about the total market. So we looked at the fact that three things. One, we look at the Dow Jones today, it's up. So cooler heads prevailed, as they would say. We looked at how much it takes to move a crypto, and it's not a lot. So even though everyone's yelling the sky is falling, everyone's selling, that's not necessarily the case because it doesn't take much to move the price. So three, what do I look at? I look at that on-balance volume to say, are there more buyers than sellers? It's telling me there's more buyers than sellers. All right, let's just say that's the case. Now we want to see, are we in alt season yet? Are we going to have an alt season? What do we look at? Well, first we want to see, as we've always discussed, this is just an update, but if you haven't seen this before, Bitcoin dominance, 65%. The other day it was up to 66%. That means that the majority of this total market cap, 66% of it is money in Bitcoin. We want to see that money then move into Ethereum. That's typically what happens, and then into altcoins. So this needs to break to the downside. It has before. How do we know that it's broken to the downside for good and we'll actually have an alt season? One of many indicators is called this pi cycle. Long story short, when these two cross, typically within 3 days, you're going to have a drop for good. That hasn't happened yet. Once it happens, we want to see Ethereum. This is a chart of Bitcoin versus Ethereum. When this is coming down, it means that Bitcoin is growing at a higher percentage rate than Ethereum. So if Bitcoin goes up by 2%, Ethereum is going up by, say, 1%. Eventually, we want to see Ethereum going up by 2% and Bitcoin going up by 1%. It did have a nice real spike here and just went sideways, and then that recent event kind of slowed things down. Once that happens, then we want to see things move into the others market. That is the total market cap of the 125 largest crypto minus the top 10. So take out Bitcoin, take out Ethereum, get rid of some stable coins. This should represent, most people look at it with regard to all altcoins. What do we see? Very similar to the total market. We see that the peak total cap of others is coming down over time. Here's about 450 billion. At the moment, it's 220 billion. It has dropped 50%. You look at the on-balance volume. Look at this. At this peak, and over here, these recent peaks, same amount of buyers. You've got all these buyers that came up, and only 30% or so, here's where it is now, have actually sold. So even though it's dropped 50%, significant drop, over here we're not seeing, you would expect to see this. Now everyone makes their own decisions. My decision, if I saw that, would to be look at other indicators and potentially get out of the market because everyone is actually starting to sell. Or at least we've reached equilibrium where the amount that bought sold. But we're not seeing that. Yes, it's come down recently, but over time, it has been pretty high. Even though this has come down, that's telling me there's buying pressure, I expect this to eventually go and break to the upside. So I hope that was helpful. Quick market update, particularly because of the fact that with crypto, people can have knee-jerk reactions and they got to wait. And yes, with the Dow Jones, cooler heads prevailed. It did not take a dive. It's actually up today. Have a great day. Hope this was helpful. Hope we can all make generational wealth together with crypto. Thanks for watching.